Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book one of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book one free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday. Good morning, everyone. Today, 3 remarkable Canadian projects: Eskay Creek, Newfound Gold, Blue Lagoon's Dome Mountain, each telling its own story about structure, fluids, grade, and a different geological language. And we've got Dr. Quinton Hennigh, one of the most respected minds in the modern exploration geology sector. And over the past 3 decades, Dr. Quinton Hennigh has been the center of major discoveries and reinterpretations, whether it's Pilbara, paleo, placer systems to high-grade orogenic systems, epithermal gold deposits across the Americas. His ability to see patterns and to connect fluid evolution, structure, timing with a coherent model has been a huge benefit to Crescat Capital, who most of you know. And we're, of course, absolutely thrilled to be able to speak to him every once in a while and pick his brain to see what is happening with some of these really remarkable companies that are scoring high on our drill sheet as well. But once again, welcome to the show, Dr. Hennigh. It's a pleasure to have you again. How's everything looking just today?
Good to see you. Yeah.
Well, I'll ask you questions 180 million years in the past later, but we'll start with today.
Okay. Well, taking the temperature today, look, I guess what I would say is, the fear, panic, whatever that set in when gold and silver took a pause and came off a few days ago, it's amazing to see how quickly the negative sentiment built. Okay. But here we are today. Gold and silver are both resoundingly up. And quite frankly, this, in my view, I mean, on a technical basis, this looks very strong. we have to weed out the weekends. That's part of any market. Climbing the wall of worry, however you want to put it, it has to happen. And I think we're going to see more of this. I think as we see, you know how when the market's going down, you always feel like when then there's a little jump, everybody gets exuberant. Oh, maybe this is the turnaround, and then you get sucker punch and it goes down a bit more.
Yeah.
This is the opposite of that. Okay, it goes up, 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 real steep, and then it pulls back a little. That's your sucker punch, and then it takes off again. Okay, the people that understand that and can appreciate it and say, "Wow, I can buy the dips," whatever phrase you like to use, they're going to benefit here. The rest of the people who just can't tolerate this kind of volatility, well, sayonara, get out of here.
They shook out the weak hands there for sure. And I don't usually I don't trade because I don't watch the markets all that much. We like stocks and we hold them for a long period of time. But with that shakeout the other day, some of the names that you've talked about before that we love, that we like, they dropped significantly. Where immediately I was like, I'm buying more. I have to get more. Like this is incredible. Because once again, there wasn't any doubt in my mind that, the story of gold is over. No one's going to, everything's picture perfect in the world. The economy's fixed. All the debt issues are so I just thought, this is incredible. There's panic, and that's the perfect time to be going in and looking at some of these companies. So, and once again, we've got 3 new ones that we wanted to talk to you about, because we talk to you about, different ones all the time. And these ones are interconnected. They're different time across the Lassonde curve, which we like to do is match them up, and they're all very, very compelling stories. And perhaps we'll start with Eskay Creek, because that's one, if anyone's in mining, that one they know. The Skeena story is a big one. Let's start with Cisco. If you could go back 180 million years, so I promised I'd go back a little bit and stand in front of the seafloor above Eskay Creek, what would that actually look like? So would it be like boiling vent fields? Would it be something in between that, or what's the kind of the basic boundary between volcanic or hydrothermal life? What would it kind of look like back then to create what we have today?
Sure. First of all, you're right that these deposits that we're talking about here at Eskay are VMS deposits. They happen to be exceptionally precious metal rich, which makes them, kind of unique. I mean, it's not that precious metal doesn't occur in many VMS deposits, but the grades that you see in this area are kind of stand out amongst all VMS deposits. Okay, what would we have seen many years ago, back when these things were forming? We would have been in a position, say, about like the Sea of Japan. Okay, so you got the Japanese archipelago, but then right behind it, you have the Sea of Japan, which divides Japan from the mainland of Asia. And it's in a setting like that these deposits form. Okay, now there were faults that drop portions of the seafloor down into what we call grabens. And it's usually along those structures that hot fluids were rising up, and they would form these VMS systems. And it's not just one system. Really, the way to think about this is that entire graben, that entire back arc, what we call back arc basin, would have been an active geothermal system, and it would have been active for quite some time. It would have been active for millions of years. And as it was active, it basically, you saw fluids come up through the oceanic crust, scavenge metals. In this case, a lot of precious metals. The fluids were conducive for carrying a lot of precious metals, as well as some base metals. And as they came up closer to the seafloor, they cooled. They started to mix with the cooler seawater, so the chemistry changed. And you ended up depositing stockworks, so basically sulfides that occupy the seafloor muds and stuff like that. But then they also reached the surface, and they actually issued out onto the seafloor in what we call black smokers. And these black smokers, as these mounds built up of sulfides, precious metal rich sulfide, they form the really special high grade deposits that we see, like the old Eskay Creek mine was a VMS deposit. Now, that said, when the mounds form, sometimes they become destabilized and they actually slough down into the graben, because there's a bit of topography on the seafloor. And so Eskay Creek was more like a VMS that was forming, and then it broke apart and it slipped down and formed a layer, almost a sheet-like layer of super high-grade sulfides. but it was a VMS in every respect.
So how would you, I mean, so we've got that foundation, that fundamentals. How would you classify SK today if you were to look at it and go, and with all that you just shared with us and then the snapshot today, how would you continue to explore it?
Okay, so if you look at historic Eskay Creek, which was really focused on the super high grade. When I say super high grade, I'm talking like, 40, 45 grams, somewhere in that range of gold per ton. And then it also had lots of silver, interestingly, about 2,000, 2,100 gram per ton silver, I think. Okay, that original deposit was in a sulfide sheet-like sulfide body, like I just described. Okay, and it was found by it was International Corona, and then Homestake bought it, and then Barrick bought Homestake and mined that deposit until through its entirety, and shut down operations, I think around 2011 or 12, if I remember right. Anyway, they mined that cherry. Okay, they mined that very, very high grade part of the system. Their cutoff grade, remarkably, was something like 16 grams per ton or something gold. So they were definitely focused on the absolute highest grade material there. But there was an absolute ocean of like I said, the stockwork or feeder type mineralization that formed in the seafloor, and then even the low grade halo around the VMS itself. That's what Skeena is focused on. Okay, so this image right here shows you that stockwork material, and it's very broad. In fact, tonnage wise, the tonnage of material that's here far exceeds the original sulfide deposit that was mined by Homestake and Barrick. Okay, so you have probably an order of magnitude more tons here, but albeit at lower grade. Okay, the grades here are, I'm not going to say they're low grade; they're still high grade, but they're lower grade compared to the original Eskay Creek deposit. But look, it makes a great open pit mine. You can also see that they're going to dive down and go underground in some of the extensions that they see projecting to depth there. This will be a major mine. It can produce a few 100,000 ounces per year. Can't remember the exact numbers. They are going to make a concentrate here. So the metallurgy, as I understand, the metallurgy bodes for making a concentrate rich in precious metal that can be exported as a sulfide product. Basically a shipping product to overseas smelters. Okay, so they're not really looking to try to pressure oxidize or treat this on site, other than float and make a concentrate.
And do you believe like some of these other like feeder systems have remained unexplored? Like I guess there's an upside to continue going, like these little pockets.
Absolutely. Yeah. I think the work that we did at Eskay Skeena has the original Eskay Creek deposit and the ground surrounding that. But Eskay Mining has the properties that the surrounding terrain. Okay, and that includes a lot of this graben, this old ancient graben that formed in the seafloor. And we found lots of VMS mineralization across our property. Most of it is feeder type, but we're also still hopeful that somewhere out there is a deposit, like an exhalative deposit, something that came out on the seafloor like the original Eskay Creek deposit.
And fully funded, which is also great to see. I mean, this is a it's going to be a mine. It's got support.
Well, Skeena, Skeena's got full support. Skeena, I think it was about 12 months ago, or 12 or 13 months ago, that they got fully backed. I think Orion is in there, and a few other parties have syndicated the financing to build this. It is interesting because they don't really have full permits yet. I'm not exactly sure where that stands. I know there's a lot of speculation around when and in what form they'll receive their permits. But it's really interesting to see how many parties rallied to provide the finance support for this thing to go forward in spite of the not having the permits in hand. I guess it shows that the market's starting to turn and people have appetite to jump into these development projects.
Well, and it's great too, because if someone's waiting to see a catalyst to set this thing on fire, really go, that would be a good one. And once again, when you don't know, if it's like, oh, we should know in 2027, you go, well, I can wait, but you don't know. That's the anticipation factor.
Yeah, but I do think if you look at the returns that you can see from some of these development stories these days, they're phenomenal. Okay, a
Yeah.
good example would be Artemis Gold.
Yeah.
Artemis Gold, I think in 2020 they basically picked up the BlackRock project, in BC, and they took that forward. Of course, that's a bulk tonnage. It's a very large bulk tonnage operation. And Stephen Dean and his team, which they're very sophisticated mine builders, they financed it and succeeded in building that. And they went from a market cap where they started, I think it was like 2 or 300 million Canadian,
Yeah.
to I think they're north of 5 billion right now. It's absolutely remarkable. Yeah.
Some of these stories, they are incredible, and it's good to see that people are recognizing and getting more excited and interested in it. And once again, having 3 different projects that are very rich geological stories at different stages of development is a lot of fun too. And before we move on, maybe because we love talking about the Golden Triangle and that resounding area, are there global analogs that you could point to that that could refine their search parameters within the greater Golden Triangle from this, like lessons learned from that one could take to other projects and properties?
You're talking about other areas around the world, or
No, just within the Golden Triangle.
within the Golden Triangle?
Yeah.
Look, there's a lot of new geology, I'll say, that's starting to take shape across the Golden Triangle. And while these VMS deposits were definitely a key focus for exploration, especially in the late 1980s, 1990s, because of the success of Eskay Creek, it's not to say that that's the only style of gold mineralization here. More recently, look, like Goliath, they found this remarkable lode system, the gold silver lode system, that's associated with what are called Eocene. It's basically an age of intrusions. It's much younger than Eskay Creek. Okay, these are much younger, but there seems to be a suite of Eocene magmas that came up here and there throughout the Golden Triangle that appear to have gold associated with them, like sizable gold discoveries. Goliath being the first, but now you're starting to see Juggernaut. Definitely on this something similar. Even Eskay Creek mining has found an Eocene intrusion with very high grades as well. So I guess to answer your question, it's the hunt that continues. We have a lot of deposits in the Golden Triangle. There's porphyries, there's Brucejack, whatever type of deposit you want to call that. There's Eskay Creek. It's a hunting ground that's truly exceptional on planet Earth. Why this little piece of ground seems to have such an endowment of metal, I don't know. But boy, if you want to find big deposits, you hone in on a region like this, and you focus all your efforts to make that next discovery.
It is fascinating too when you're treasure hunting and something new comes to the table. And we have talked about Goliath, and in regards, they've got a PhD student who's doing his work on it, who helped to identify this along with you as your advisor to the company as well. For me, because I like to nerd out too, it's when you understand to the best that I can, I'm not a geo, the process that's involved in the treasure hunting. It's kind of like watching one of those old Jacques Cousteau movies where they're diving in the water. I don't know anything about water or diving, but when you're finding something, you get excited. And for them to explain, this is what we're doing, then the next question is, have other people then looked, or did they pass those assays along and not looked into some of these other areas? A lot haven't. So it opens up. Well, this is very interesting to learn.
Geologists are notorious for becoming model driven or model focused, meaning they say, okay, we know what Eskay Creek is, right? So let's go find the next Eskay Creek, and they will use the criteria that they see for Eskay Creek to drive what they look for. Okay, well, sometimes they can overlook the obvious. I hate to say, I'd love to say geologists are broadly minded and but most are very focused, and in becoming so focused, they often overlook things that are, quite frankly, now obvious in retrospect.
And I think that's in every field too. It's say in finance, someone just goes, "Can you just show me a comparable project? I'll just do a comparative table." And even though the nuances could be significant and be telling the whole story, there's like, just give me one I can compare it to.
That's right. Yep.
Well, let's move on because and then we'll have you wrap up each one as well and your own kind of take on it. But this one's very interesting, and this one I've been wanting to talk to you about for a while. Newfound Gold, the Queensway, Newfoundland. This one, incredible rise early on, a bit of a pullback, but hey, their assays and numbers have been looking stellar yet again, and it's obviously getting all the attention it deserves. So maybe you can kind of tell me about this Queensway Appleton Fault, spectacular intercepts. Maybe give me the backstory where we were a couple years ago, and we'll get to today.
Okay, so the original discovery, I would call, look, there was work here by Noranda and other companies way back in time, and yes, other companies had hit occasional high grade drill intercepts, but it was really the efforts that Denis Lavalette and the Newfound team put into exploration here. Firstly, as a private company in late 2019, I think it was November 2019, they drilled an area that, in fact, the first drill hole where there was an outcrop. It was an interesting outcrop because it wasn't necessarily huge grade on the outcrop, but boy, when they tested this thing, they hit, I think, 19 meters at 93 grams in the very first drill hole. Okay, now with COVID and stuff, it took a while to go public. I think it took nearly a year to get everything public. But when they did, they were able to raise a lot of money, get out there, start drilling in earnest. And it was a remarkable drill success story. Like it in late 2020 and then into 2021, you saw the stock just go on a tear. I think it peaked up around $14 or $15 at some point in 2021. And that was on the back of just a long succession of super high grade drill intercepts. Okay, then in classic Lassonde curve form, the story peaked. I think it probably peaked in, I don't know, when was it? Probably 2021, maybe.
Yeah.
Late. I can't remember exactly, but it was sometime in there. And then it started to come up. Part of that was because the market was tough. Okay, like there was a burst in investing in the gold market in 2020, 2021, but then they started raising interest rates in 2022 and tightening, et cetera, to kind of pop that balloon. Well, okay, that could explain part of why Newfound came off like it did, but I think also the speculative buying, started to diminish, and then, like all stories, the Lassonde curve kind of comes down, and they went through the valley of death. Okay, now the company has gone through some pretty important transformations here recently. They brought on development type people, I think earlier this year, if I remember right, it's like February or March. So you got Keith Boyles and Paul Hewitt. Well, Keith's the CEO, Paul's the chairman. You got some new directors in there, and these are all development and production focused people. That's a good thing for a project like this, because you got to take it now through the next phase, which is development, and then hopefully see that appreciation on the right-hand side of the Lassonde curve. Now, the company came out with a resource a few months ago, and it was, we'll call, underwhelming. It was remarkable how, relatively small compared to, like, if you think in terms of the drill holes that we saw coming out for many, many months there, for many years, really. You look and you think, gee, where's the beef kind of thing? It's not an immediate answer that you can provide. Why did it come out so small? Well, I think it's underdone. Okay, I looked at that 43-101, and I would say that they constrained the high grade. This is a notoriously high grade system. It's an epizonal orogenic system. It's largely structurally controlled. Yes, there is some gold mineralization that extends beyond the high-grade veins, but by and large, 90% of the gold occurs in these extremely high-grade structures, quartz-filled structures. Okay, now, well, what does that mean? Well, resource modelers tend to highly discount deposits like this. This is a phenomena that occurs, and I'm not going to debate right or wrong here. I'm just saying this is the way they treat a system like this. They tend to discount the influence of the high grade by capping it. Okay, and how those caps are set is very important. They also discount it by restricting how much the computer effectively looks out beyond the radius of that drill or the drill hole to project grade to the next holes and stuff like this. In other words, you can let the computer connect the dots and fill high grade through from place to place to place, or you can kind of tweak the dial down and say, okay, we're going to constrain the projection of the high grade beyond each individual drill hole. They did that here. Okay, they constrained it. And then lastly, they used a pretty large, it was very interesting to see, because I'm thinking, okay, we've got largely a very tightly structurally controlled deposit, yet they applied fairly large blocks to this. In other words, if you have a structure like this, and then you put it in a block like that, okay, well, it's going to mean that block comes back lower grade. So the grades, in every respect, top cuts, restricting the search radius, the size of blocks that were chosen, in every respect, those are going to diminish the grade and really the overall product, in terms of ounces. Is it the right, here's my experience. I worked with Kirkland Lake for a while. In fact, I started helping Eric Sprott in 2016, I think it was. And this was when he first invested in Newmarket, which owned Fosterville.
Yeah.
And then I was kind of helped do some stuff to, get the Kirkland takeover of Newmarket done. And then when Kirkland came in, they had to take, what was starting to become a very apparent high-grade discovery and go through the same thought process. Like, how do we put a reserve to this? How do we understand this? And I remember the first reserve that they put around that, or first effort to put resources and reserve around it, largely underestimated the grade dramatically. Like, they were talking like, I can't remember the numbers. It was like 20-something gram per ton. Expected grade, and then the grades came in more like 40 to 50 gram per ton when they actually mined the darn thing. And it was so chronic that I remember there was a point where because they had underestimated the grade so much, that when they were mining, the amount of gold that was going through the plant and coming out through the elution circuit, where they actually pour the gold bars, they had to build metal sleeves around the ingot molds to bake them taller, because they had to make bigger bars. And, talking about a problem,
that's a great problem. Yeah.
Anyway, look, I can't guarantee that that's going to be the same way this plays out, but I think it'll be interesting to see how it goes. And I think Eric Sprott, because he was chairman of Kirkland during that time, I think he understands that, and he's always been quite supportive. And, quite frankly, Paul Hewitt and Eric are quite close to one another. So I'm sure they'll maximize the value of this thing going forward.
Yes. I mean, it's an exceptional story. I mean, it's very few times where you've got something that clean metallurgy, it's moved from like exploration to basically like engineering. It's still continuing, getting great numbers. And sometimes, I mean, just my kind of 2 cents worth is I can understand from a management point of view that, let's be really cautious and conservative. Like,
yep.
we don't want to go out there and over promote or oversell something in case of this or that, because a lot of people would have grown up with, the Bre-X and then all through, cycles and stuff. So I can understand a tendency to let's be ultra conservative, but then knowing that the smart money isn't budging, like Eric Sprott's not selling, right? They can wait it out. But unfortunately, for a lot of retail, they see something move down and they think, oh, the story's over. And what's so important having someone like yourself on is to go, wait a second, let's have someone who's qualified to look at this in a different perspective. And not that it's anything else other than they might be just being cautious. And that's it. Let's look at what they really have. And that reframing, people would understand and go, oh, okay, I understand now why the stock's behaving a certain way.
You got two, I mean, according to the Lassonde curve, if you fully subscribe to that thesis, you got two opportunities to make money. One is on the left-hand side in the speculative period during discovery. Second is when these projects, these companies with projects, they basically go through the valley of death, and then they find that magical path, like the things come together that they need to take them through development and production. You can make a lot of money. Like I told you earlier, like Artemis Gold, Blackwater, like everybody thought, oh, that project's dead. And what did they do? They picked up this thing for cheap I think it was held by New Gold or something like that. And they picked it up for cheap, and they made a $5 billion company out of it. Like,
Yeah.
that's incredible. That's what you can do here.
Yes. And it's funny, even when I first started, I thought, well, if you've had a project and it didn't work out, then it means it's worthless. And people are like, no. That isn't the case at all. You could lose these just because of time factors. A million ways that you could lose it. Never mind. You pick targets that just were slightly off, and you went through $10 million. The next crew comes in and they hit. That's what makes it remarkable. But there's enough science to know that, no, you've got something here. It's just, are you applying all the techniques and the latest techniques, and do you have a little bit of luck from the drilling gods as well? Never hurts. Beautiful. But that one is definitely one I've been very interested in watching for a while. And once again, another interesting Lassonde curve story. Let's just jump into this one. And I didn't really do much research because I'd seen the name popping up a lot more lately. And I thought, you know what? I don't want to know too much and just have you tell us about Blue Lagoon, this Dome Mountain here in BC, because it has been popping up on my screen quite a bit. And I thought, you know what? This will be an interesting one to ask Dr. Hennigh about.
Yeah. Okay. So we've been associated with, when I say we, Crescat has been an investor in Blue Lagoon now for probably 5 or 6 years. We jumped in back in 2020. Yeah. So 5 years at a point where the company had secured the ownership of this asset, or a deal to own the asset, but also had started to do some drilling. They were doing some exploration in earnest, but then they had this remarkable high-grade resource, not a big resource, but something around 250,000 ounces of resource that was in a position. It actually had an adit in, and it was in a position above, the water table and stuff, where you could go in and mine. Okay, it was conceivable that you could go ahead and develop this thing. Now, the company did a lot of exploration over subsequent years. A lot of that was at my bequest. Let's see if this thing gets bigger. And there are quite a few holes below the current resource in other parts of the vein and structures that you see at Dome Mountain that were great. I mean, remarkable intercepts that tell us there's probably a lot of upside here. But the company chipped away over the past few years. They chipped away at the permitting, and they managed to get a permit in BC, which I found absolutely remarkable. That was earlier this year. They succeeded in getting the permits they needed to give them the green light to go towards production, and that would be production on this small, say 250,000 ounce resource. All right. They then set a timeline. You can see here the time frame that we're talking about, where they basically did all the development work, and that included the water treatment plants and so forth. And now I think, last I heard, they are underground. This timeline has slipped a bit, but I think we're late October, so they should start production at around 100 tons per day here shortly. Don't know right this second where things are at, but I certainly hope they're on track to do so. Are they looking to process their rock at site? No, they've got to deal with Nikola mining, which is it's not immediately proximal, it's a ways away, but they can ship this ore down to Nikola and then process. They have, as I understand, they got priority treatment at Nikola's mill. That makes for low capital because they don't have to build their own mill, and they can ship this stuff. Yeah, they're giving some upside to Nikola in terms of toll milling, but I think it's a reasonable approach to use for a system like this. I really hope these guys get this production going, even at a modest scale where this thing is only 100 tons per day with the grades they have here, which are typically above 10 grams per ton. This thing should crank out pretty decent cash flow. And with that cash flow, I would really love to see the company further explore this property. Everybody knows that this project has a lot more veins. There's a lot more potential immediately underneath the existing resource. The analogy I use is that the geology here reminds me of some of the things I've seen elsewhere around the world. For instance, K92, as crazy as it sounds, K92 in Papua New Guinea. Okay, the veins there, nice fat veins that have gold and a bit of base metal. Here we see gold and copper at depth showing up. I think that kind of potential is down there. Okay, and if these guys can kind of bootstrap their production and cash flow here, and have enough money, they can start drilling out the higher grade portion of the system at depth. This could evolve over time. Here, go to that image that you had, that long section with bright colors on it. Up. Where was it? Somewhere in here. Don't know where it went. I saw it for briefly there. But anyway, they can evolve. This story could evolve very quickly with drilling, persistent, well-targeted drilling. It could grow very quickly and become a significant high-grade gold mine.
And we love like real near term. That's always exciting. And what was one of the questions I was going to ask is if you thought this was like one long-lived hydrothermal system, or if it was like a pulsing fluid pulse type of situation. And you kind of answered it. You said that there could be lots of different veining.
There it is. There's your image right there. So
there we go. Okay,
so you can see all the polka dots up high. That's the resource, and it's above the adit level. See the tunnel that goes in there? Okay, so that's what they're focused on right now. But look at the system down plunge there. You got drill holes that are way down there. And a lot of these were ones that I pushed them to drill. I can't read the numbers, but you can see there's nice big widths. These aren't little tiny veins. These are nice fat multi-meter veins. And the grades are phenomenal. Really good gold grades, but also copper and other metals there too, a bit of silver and stuff. Okay. This is what I mean. To me, this looks like K92 back 7 or 8 years ago, when they were focused on just what they knew, and they said, okay, let's go ahead and start production. But then they started drilling around that. Now today it's an enormous system. Like, what is this? It's what we call a carbonate base metal gold system. What is that? Well, it's a subset of the alkaline gold family. It's probably related to a porphyry somewhere around here. Okay. Like there's something lurking around somewhere. But these are very large scale veins that will have a lot of vertical profile. Like they could go down a kilometer or two. Like, there's nothing geologically, there's nothing cutting them off. So this, that's why I get excited.
That we love those kind of growth stories too, and nothing better than in this kind of market with gold where it is, and most people being quite optimistic with gold, the sooner production and make some cash flow and be able to fund exploration through cash flow, that's very exciting. I mean, that is very interesting for those that are because once again, there's two different crowds: ones that just want to play the find something game, or ones that are like, no, I want this thing to mine and make some cash flow. And this one is very interesting, and glad that you brought up, because it is that near term with a big upside. So I've got some integrated questions here to ask, because there are some interesting things with these all together. So across, whether it's Eskay, Queensway, or Dome, extraordinarily high grade, deep crustal structures. Do you think this points to a unifying architecture? Is there something, even though they're separated by quite a bit, is there anything that like that, some sort of deep trapping, faulting, feeding the system or anything? Is there anything architecturally there that you say, yeah, oddly enough, there is something?
Okay. Wow. That's a profound question. Okay. Okay. I'm going to take a deep dive into geology and geologic thought. Basically, if you look at the history of economic geology, especially over the past couple hundred years, it is model driven. Okay. If you look at people like Lindgren, for example, they recognize that certain in the crust, so there's some deposits form shallow, some deposits form way down. Okay, then there's other lines of thought around the association of ore deposits with magmas, for example, porphyries or other types of magmas, and how do they all connect? Then there's other people that have focused on the processes themselves, like hot springs, for example, or metamorphic processes, or like I said, igneous processes, like igneous fluids and stuff. Look, there's all sorts of different pictures that we have in our head as geologists of what each deposit type is, and we've really pigeonholed them. I mean, there's literally hundreds of different deposit types. Okay, And each one of these deposit types, we've given their certain characteristics, like the depth of formation and what's the, the characteristics of the, what does the deposit look like? What's the grades of it? What's its nature in terms of geometry? It's all sorts of aspects. Okay. And that's great because you can take that model, you can take that understanding, you can go out and explore for other deposits, especially if you understand the context, like the tectonic context. Okay, we should find these types of deposits in certain areas. You can go into the right hunting ground and make those discoveries, like the Golden Triangle, for example.
Yes.
Okay, but if you step way back and you look at it from 30,000 feet and you say, well, you know what? Is there really all that much fundamental difference between okay, I'll pull random thoughts together. Okay, an alkaline gold deposit and an orogenic gold deposit. Okay, most people are going to say, what is this nut talking about? Okay, look, here's the way I see this. These deposits and the formation of concentrations of metals are driven largely by chemistry. Okay, almost all of these, not all of them, but many of these deposits are formed from hot waters. Okay, so just park that thought, everyone. A lot of people say, gold can't be dissolved. It's a noble metal. That's not right. Okay, it actually can be dissolved. In fact, it can be transported and concentrated. That's how we get gold deposits. All right.
Yeah.
So, and it's hot fluids. I'm not saying all deposits, but many of the deposits we have on Earth form from hot fluids. Okay. Yes, depth of those fluids, like where they formed and where they migrated through the crust, very important, very important. But I'm going to tell you, like an alkaline gold system, many of the alkaline gold deposits we know, what does that mean? Well, an alkaline gold system is simply a deposit, a gold deposit primarily, that's associated with an alkaline magma. These are magmas that had lots of alkali metals in them, okay, like sodium, potassium, such. These things can go down in the ground a long way. Okay, they can go down 2-3 kilometers. And if you look at the mineralogy of the veins, you get carbonates, you get quartz, you get free gold, you get weird minerals like bismuth and tellurium and other stuff. You get a lot of alteration, like the water cooked up the country rock in certain ways that resemble, quite frankly, orogenic gold deposits. And orogenic deposits are thought, okay, they're metamorphic fluids that came up from way down in the ground and worked their way up and into a shallower crustal environment. But they also produce quartz carbonate veins with bismuth and tellurium often, and same alteration. So in other words, I can make that leap myself. I can say, you know what, there's not a lot of difference here. And in fact, the processes are almost identical to form these two deposits that most people consider disparate, like totally different than one another.
Yes.
But in my book, they're actually not all that different. And I think as time goes on, as geologists, I think we're appreciating the chemical processes more and more as we understand more and more. I was talking to a professor yesterday who showed me some stuff that just blew me away. Okay. In hot spring quartz veins, you often get what we call dogtooth, quartz crystals growing in what, has always been interpreted as open space. These, like a hole in a fracture, and the quartz crystals grow off of the walls. Turns out he's shown very clearly that what really happens is in many cases is that silica gel, believe it or not, is injected into a fracture. So you basically have something that's about like jello. Okay. And that the quartz nucleates and grows in a gel. And that just blew me away. Like nobody's really thought like that before. But you know what? He showed me evidence. I think he's spot on. I think he's absolutely correct. And how is that going to change? I think our understanding of epithermal deposits in this case is going to take on a whole new meaning. I think, our whole construct about, we have to be in the boiling horizon, and it's not quite the way it is. I think we're starting to learn that that's not exactly how these things form. So interesting stuff.
Very interesting. And I mean, this is a very interesting time because we are at the very early stages of machine learning, AI. Well, machine learning has been around for a while, but of the advancements that we're at, where you need a lot of data. I imagine for people that love modeling, that they could work with a large language model, and they could go through like the amount of variation and have the computer as well do variation. For modelers, this must be a very thrilling time because it's like I could do like 10 times the amount of modeling I could have done just by even interacting to some degree with a large language model. And I'm sure there's people working all sorts of different ways that you just need, give me the data, give me as much data as I can get. But I guess that would also throw in a bit of a wrench because people don't like to share their data.
That's true, especially mining companies who are competing with each other. Yeah. Part of it's because they're just plain lazy, and a lot of that data gets lost in the form of, a 3.5-inch floppy disk that nobody ever put into a computer again. Like there's a lot of data out there, and that's probably the biggest challenge for geology and AI is that there is no universal standard for data and its input into a computer. It takes a lot of work to get all that data into one giant database that can be utilized by AI, but we're heading there slowly. Yeah.
Hopefully get there, because I imagine it would really help. I mean, whether or not it's foundational or ground, I don't know. I mean, I don't trying to look too far in the future on these things, but to me, instinctively, this would be an excellent tool to constantly drive questions home, to get instant feedback rather than I have to wait. It's like, no, you don't have to wait.
I have a son who works for NVIDIA, and his job is in AI. Okay, so I am I'm an old coot. Okay, don't get me wrong. I don't pretend I have a deep understanding, but I do know that there is a place for this. And I've talked to my son, and actually both of our sons are in computers. But I've talked to him extensively about how one could integrate geology and AI. So
yeah, just say, listen, just tell Jensen, maybe a chip that's going to do this. That's all we need. Just help out. Come on.
Yeah.
It's critical. We need this. Okay, I'm gonna ask you a fun one. This one's a bit challenging, and we're gonna just go talk about these three. So this question for this three, if there's one that's like out of all the ones out there that you could answer, we'll leave that for another day. So here's the question: if you could redesign one exploration program, unlimited budget, at one of these camps, what single hole or intersect would you drill to answer the biggest outstanding geological question?
Now, are you referring to the three companies we spoke?
Let's just go with these three. Which one out of those three would you pick? And then if you say, well, listen, there is one we haven't talked about today, we'll do that as a teaser for another time.
No, I'll hit it hard. Okay, all right. So look, I can answer for drilling for each one of these things. Okay, now Newfound has done a little bit of deep drilling, but I really think that if they had a decent budget for deep drilling, like just say, okay, we're going to allocate $8 or $10 million for deep holes, I would poke some holes down. Like do your best modeling to project some of these higher grade zones, and sharpshoot some deep high grade. Because as soon as you show the market these things go down a kilometer or something, and you're still hitting high grades down there, it's not going to take too many brain cells to say, oh my gosh, this is going to be multiples bigger than it is. That's great. Okay, Eskay Creek. Look, I think the smartest thing that could happen at Eskay Creek is Skeena probably works with Eskay Mining somehow to consolidate the ground, because if you could do that, there are some really big think targets that should be tested around Eskay Creek to find the next super high grade Eskay Creek type deposit. Deep holes, they're probably 600-800 meter holes, but I can see a half a dozen holes going across several targets that could deliver amazing discovery. Okay. And then at Dome Mountain, at Blue Lagoon, I pushed the company to drill some of those deeper holes that ring fence the resource, and we hit. Okay, we'll chase those down. If you drill a kilometer vertically below that high grade resource, and you show, hey, there's gold down there that's just as fat and high grade as what's up there, then it's not going to take too many brain cells to say, heck yeah, that's going to be the next K92. So there's your answer.
I love it. Well, we'll leave it at that. Yeah, that's a great way to sum up the three projects. Once again, Dr. Hennigh, we always appreciate you coming on here. A, helping to educate us. Two, to remind people, to put a different perspective on what they're looking at, because there's people in a lot of these stories and stocks, and they're in it because they love they're finding stuff. They believe in it. And then, of course, there's these people who just dumped out of fear. And that's, I'm not going to comment on what's the right or wrong thing that someone to do, but literally, it's better to consult, do a bit of research before you make any quick decision on anything. And a lot of these companies that we've talked about that you're involved with, these are significant stories. They're hitting all the right things. And if I look at them and I go, if the stock has dropped significantly and there's no news, and there's actually the news that's out there is positive, I don't know. That's a no-brainer for me. It's
we're very fortunate to be able to buy the sold.
Beautiful. Well, Dr. Hennigh, thanks so much. I know you've got a busy day ahead of you, and we appreciate all the time that you give us, and we'll talk to you again real soon.
Anytime, Andrew.
Thanks so much. Take care.
Take care.
Most investors lose money